Earnings season drops in the middle of the coronavirus pandemic. This is the Seville Reports Weekly Review, where we take a look at the headlines that move the markets during the week and all things investment related. On Monday, the markets closed mixed. The Dow closed down 328 points, the S&P closed down 28 points, and the Nasdaq closed up 38 points. News that weighed on the markets was the settlement between OPEC and Russia to cut oil production by 10 million barrels per day. Analysts on Wall Street felt the cut was nowhere near enough to stabilize the markets. Ford warned investors on Monday of lower than expected sales. The company reported it expects revenue of about $34 billion and a first quarter adjusted loss of around $600 million. This came on the doorstep of the upcoming earnings season, which could play a big part in driving the markets back to its lows or kicking off the recovery when investors get financial data behind the crisis. Tuesday kicked off earnings season, and that, along with some other news, made investors excited to enter the market. The Dow closed up 558 points, the S&P closed up 84 points, and the Nasdaq closed up 323 points. Investors were bullish on the news that state governors were teaming up to plan the reopening of their states. Investors used that news to jump into the markets and buy brand name companies. Apple, Amazon, Walgreens were just a few of the names that were up 5% on the day. Banks kicked off the earnings season on Tuesday. JPM Chase reported an EPS miss by $1.34 and a revenue miss by $1.2 billion. JP reported seeing changes in consumer behavior with credit card spending, less spending on travel and restaurants due to the coronavirus. But deposits were up 23% versus a year ago as consumers tried to stay liquid during the crisis. Wells Fargo reported an EPS beat by 18 cents but missed on revenue by $1.5 billion. And Johnson & Johnson reported an EPS beat by 30 cents and a revenue beat by $1.2 billion. Johnson & Johnson lowered guidance for 2020 but raised dividend by 6%. Now that's a flex. On Wednesday, the market sold off. The Dow closed down 445 points, the S&P closed down 62 points, and the Nasdaq closed down 122 points. March retail sales numbers contributed to the market sell-off. Retail sales fell 8.7% in March, which was worse than the 8% expected by economists. Some sectors of retail that felt the most pain due to the coronavirus lockdown were department stores, which saw sales fall 19.7%. Furniture store sales fell 26.8%. Sporting goods store sales fell 23.3%. And clothing retailer sales fell more than 50%. In earnings news, Goldman Sachs kicked off the earnings on Wednesday, reporting an EPS miss by 18 cents, but a revenue beat by $820 million. Provisions for credit losses for Goldman increased to $937 million in the quarter versus $224 million back in Q1 2019. Goldman stock traded down in the morning but was able to close up on the day. Bank of America reported an EPS miss by 14 cents but beat revenue estimates by $190 million. Revenue of $4 billion was down from the $7.3 billion reported in Q1 2019. Citigroup also reported an EPS miss by 31 cents but beat revenue estimates by $1.7 billion. And UnitedHealth reported an EPS beat by 5 cents and a revenue beat by $170 million. EPS guidance for 2020 of $15.45 to $15.75 was unchanged by UnitedHealth. On Thursday, the market started the day down but was able to rally back to the close. The Dow closed up 33 points, the S&P 500 closed up 16 points, and the Nasdaq closed up 139 points. The markets were initially driven down by the unemployment number. Another 5.2 million workers filed for unemployment benefits last week, bringing the number of jobless claims up to 22 million since March 14th. But investors saw optimism in this week's unemployment numbers being less than last week's. Investors also anticipated President Trump's call on restarting the economy. The president advised state governors reopening the states would be their call. However, New York State's leadership did state while they are controlling the spread of the virus, they will extend the stay-at-home order. Gilead Sciences stock jumped more than 15% in after-hours trading on news that its COVID-19 drug, remdesivir, was showing promising results. In earnings news, Morgan Stanley reported an EPS miss by 12 cents and a revenue miss by $330 million. The bank reported a markdown of $610 million on loans held for sale. Abbott Labs reported an EPS beat by 4 cents and a revenue beat by $260 million. Abbott saw revenue increase in its nutrition and established pharmaceuticals divisions. The company suspended previously given guidance for 2020. And Taiwan Semiconductor reported an EPS beat by 7 cents and a revenue beat by $120 million. Revenue increased by 45% year over year, and Q1 profits increased 91% year over year. On Friday, the markets continued to move up. The Dow closed up 704 points, the S&P 500 closed up 75 points, and the Nasdaq closed up 117 points. The markets registered a second week of gains, which has caused some people to question if investors are being too optimistic. In other news, Berkshire Hathaway Vice Chair Charlie Munger spoke to the Wall Street Journal and hinted that there are a few businesses that Berkshire won't reopen after the pandemic eases. but Munger did not identify the companies by name. As stated earlier, the Dow, the S&P 500, and the Nasdaq all closed up on the week, registering gains for a second week in a row. In earnings news, Proctor & Gamble reported an EPS beat by 4 cents, but a revenue miss by $80 million, even with a 6% increase in organic sales. And Kansas City Southern beat EPS estimates by 18 cents and revenue estimates by $15.5 million. In crypto news, Bitcoin was up on the week, more than 2% from last week. Bitcoin was trading at $7,058.09 at the time of this recording. Ethereum was trading at $170.66, up a little more than 8% from last week. Litecoin was trading at $42.34, up less than 1% from last week. And Ripple was trading at 18 cents with no change from last week. Crude oil hit an 18-year low, closing the week out at $18.14 per barrel, down 21.7% from last week's closing price. A big winner for the week was Araviv, ARAV, which jumped 53% on the week following 2 positive estimate revisions. A big loser for the week was Core Energy Infrastructure Trust, CORR, which fell 46%. There was news of a tenant representing 47% of Core Energy's total revenue, notifying the company that it would suspend pipeline rental payments. Ouch. That's a wrap for this week's market review. If you want to dig deeper into the headlines we covered, links to the stories are in the description below, and a link to sign up to our weekend article in Focus is also in the description below. If you're ready to get serious about investing and creating wealth for yourself and your family, check out our latest quarterly newsletter, The Seville Report. Serious investment ideas presented in a way that experienced and novice investors can understand. If you're ready to master the markets, check out our newsletter at SevilleReport.com. Thanks again for checking out the Seville Report's market review. This channel is dedicated to anyone who wants to start investing but doesn't know how or where to start. If you have any questions, ask in the comments section, like and subscribe, and may your next investment be your best investment. See you next week. Stay safe.